Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 1st of October. I'm Daniel Lam, your host for the podcast. After the Fed rate cut last month, the US 10-year government bond yield had tested the support level at 4%. It is still in a downtrend. We're expecting the Fed to be cutting rates by an additional 50 basis points by the end of 2025 and a total of 100 basis points over the next 12 months, bringing the Fed funds rates to 3.25% by September 2026. The market is expecting nearly 3 Fed rate cuts in 2026, while the Fed itself is projecting just one. But we believe the weakness in the jobs data will allow the Fed to ultimately move closer to the market. We see the US 10-year government bond yield to be in the 4% to 4.25% range in the next 3 months, and at the 3.75 to 4% range under a 12-month horizon. Now, overweight in fixed income is in EM local currency government bonds. In addition to giving high real, i.e. net of inflation yields, the asset class is well suited for a risk-on environment in bonds. The resumption of the Fed's rate cutting cycle provides more flexibility for EM central banks to be easing their monetary policies. We're expecting a weak US dollar environment, which is supportive. EM local currency government bonds provide diversification benefits, with a low to moderate correlation with major DM bonds. The risk lies in geopolitical uncertainties, with weaker US demand and higher tariffs posing risk to the economies. Now, so far this year, EM local currency government bonds have been in strong demand. Yes, there has been a surge in supply in September, but spreads remain at the tight levels last seen in 2013, and total year-to-date returns is at nearly 10%, the highest in 3 years. Lower front-end rates and the asset class strong year-to-date performance can attract further inflows, particularly as EM sovereigns still offer a larger than average pickup over US peers. Moreover, the fourth quarter supply from EM sovereigns should be relatively limited, as most countries pre-funded earlier in the year. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.